welcome to today's live trading with the Max. My name's Chris Sedcole. I'm based in New Zealand, and I'm here with Eusebio. Hi, Eusebio.
Hi, Chris. Hi, everyone. I hope you are doing fine.
And we're just waiting for the markets to sort of get over the London Open. There's some news coming up in a half hour, so there's a bit of a quiet spot before we start trading there. And so if you have any questions about the Max or anything like that, please ask them in the question box or the chat box that we've got in the GoToWebinar. And you can select that by clicking on that little orange button that will have zoomed off to the side of one of your windows, one of your monitors, to expand it, and then just ask questions in there.
Yes, while we are waiting, so we have indeed a news release, the Halifax HPI, which is the Housing Price Index, month-over-month news release in 25 minutes now. This may impact the pounds pairs and some other pairs if there is an important deviation. So let me comment what is happening or what we can expect today. If I take the economic calendar for today, we have indeed now at this moment, Draghi speaking. In the economic calendar, this kind of event is represented in red, which factory represent a potential high impact in the market. And as one of you has mentioned, MT. But when we look the content of that speech, and you can do that with factory by clicking on that small icon here, we can see that Draghi is due to speak at the Deutsche Bundesbank Marjolin lecture in Frankfurt. And so this is, in fact, a general lecture Draghi is giving now. And in such a general lecture or some more general events, I never expect the central bank people giving critical informations. Many are thinking about that. They are considering that the way the guy will speak may be important, may be indicative of what may happen in the future, but myself, I have never seen obvious positive element from such event. And so personally, I completely ignore such kind of event. For me, it is a non-event. And from time to time, we can see, of course, some volatility in the market. But you can see here we have a long bar and the price is retracing because effectively, during that event, during that lecture or that speech, the guy, the person, will not give critical informations. And so this is for me a kind of volatility which is useless to try exploiting. And so I never consider that kind of event. And if I am in a trade before that, I don't care about that kind of event. And there are a lot of them in the calendar. And so we can, in fact, simplify our life by ignoring these kind of events. Of course, if we are in a trade, and when we see such a high volatility, sometimes it may be a good idea to bank some result. Mainly, of course, if the movement, if the volatility is temporarily in favor of the trade. So there are a lot of news that way which are not important at all in the calendar. Typically, for example, a news like, let's see, of course, this afternoon we have 1 hour before the US Open, we have the official bank rate and the monetary policy by the Bank of England. This is, of course, an important news release, mainly if we have a change in the interest rates or a change in the way they will present the UK situations. But when we have, for example, like yesterday, a news on the US dollar, the ISM non-manufacturing PMI, this kind of news is read in the economic calendar. And many traders, even professional traders, consider that that news may have an impact in the market. And again, after years and years and years of experience, I have never seen a clear and obvious impact of this kind of news in the market. And so even if it is in red, I ignore it. Of course, the ADP non-farm payroll is in red, But this is an important one. It can be considered as a preview of what the non-farm payroll can be tomorrow afternoon. And some see improvements in the employment in USA, but I'm sorry, the deviation between the forecast and the released number is not large enough. It is not large enough to consider this is a positive news. For me, it is a neutral news. And so considering the news is more complex than what many traders, even professional traders, consider, because probably they don't have a real understanding of what the news is, what the news represents, and the impact in a specific market. Now, I may consider that Forex Factory has to make a choice about the color of corresponding to the potential impact of the news, because this calendar is also valid for other markets. An impact which is obvious in the Forex may not be so obvious in the stock market, and vice versa. So you have always to be attention, to be prudent when you consider these news, and to especially this depends on the market you are trading. For the max members who trade in the Forex, we have for some times now a service which is free, and you can also subscribe for free to this service on our website. So our website here is www.maxtradingsystems.com. This is our landing page, welcome page. And so when you click on the button here, News Watch List, this is something we update every week, every Saturday during our scrolling party. We have, for the coming week, we establish a list of the news we consider as important. And we have some conventions. Whenever we mention a news as to monitor, this usually means news which is not necessarily important for the market, but in the present context, we have to pay attention to that news release. When we have a news indicated as major, this kind of news may have an impact in the market, especially with small time frames. And we consider small time frames, all the time frames from the 1 minute time frame up to the 1 hour, sometimes 4 hour time frames. And when we indicate a major H4+, this means that this news, in particular, in the case of a surprise, will have also an impact not only on the small time frames, but also on the higher time frames. So from the 4 hour time frames up to the daily, weekly, and sometimes even the monthly time frame. So we have a lot of information here. I will not speak about the bias we indicate. This requires a little more explanations, and it corresponds also to the way we trade, but we have a lot of useful information, and we have only to concentrate on these news. We can neglect all the other news releases, especially for today's. We had on the pound the construction PMI, this was Tuesday. For Thursday here, we have the Halifax HPI, of course. Then we have for the pound all the news related to their official bank rate announcement and monetary policy. And then we have later during the day the news on the Aussie, which is also the monetary policy statement from the Reserve Bank of Australia. So you can see here especially two important news about interest rates, which are the main driving factors in the Forex. In order to have an impact in the market, and let's see what will happen with the pound Halifax house price index, in order to have an impact in pairs, that news will need to have an important deviation. What I call a deviation is, let's come back to the calendar here. We are in this area right here. The forecast by a panel of economists interviewed by the Forex Factory website is 0.2%, less than the previous months. So the context until the news release for today with the pound is negative, in fact. But we will have an important deviation if the numbers which will be released here is way different from 0.2%. And the deviation is simply the difference between both numbers. We can have a better number, we can have a worse number, and depending on the situation, we will have either a positive deviation or a negative deviation. And if that deviation is large enough, the impact may be important. And it will be a medium impact as shown here by the orange color. Now we have with the max another kind of interpretations of the potential impact in the market. We have in fact three types of news, and we go into great details in our different courses about that. We have three kinds of news. We have three types. We call them type A, B, and C. The type A news are news releases which have always a potential important impact in the market. Typical examples are interest rates announcement, the non-farm payroll, of course, the GDP news release, and some other. Then we have the type B news release, and for UK, for example, the Halifax HPI is such a type B news. It has nothing to do with the color. A type B news is a news which has the attention of the big boys under two specific circumstances in the economical cycle. And presently, for the UK, we are in such a circumstance. And so we have to pay attention to that news release. When we are not under one or the other conditions, the big boys don't care attention or don't pay attention to that kind of news release. And then we have the type C news release. The type C corresponds to news that possibly many so-said specialists are speaking about, TV channels are speaking about, commenting, and so on. This is typically the case of the ISM, factoring or non-manufacturing PMI, but we never see an obvious impact of these news. Rarely this can be the case, but most of the time the type C news have no impact in the market, whatever the color code given here by Forex Factory or by other corresponding economic calendar like Bloomberg, FX Street, and so on. There are a lot of calendars. And that's it. And the distinction we are making here, especially under the current state, tell us, in fact, what kind of news we have to pay attention. And it may happen that from time to time, a news which may be important today will not be important another time. And as I have just explained, the Halifax HPI for the pound today is such a news because it is a type B news. And this is why such kind of informations which are updated every week is important. On the same page, and so there are some explanations on the way to interpret these informations. And on the same page, we give also what we call the top 10 pairs, which represent the pairs having moved the most during the last 4 weeks. In general, the last 4 weeks. If we have an important range, an average range for the last 4 weeks, these pairs correspond to pairs having had important movement. And if they have had important movement, these movements are explained by fundamental factors. And because they are fundamental factors, chances are high for these pairs to continue to move interestingly during the coming days, and especially during this week. And so these are pairs, and we can take the 10 first pairs, which may be interesting if there are no other choices to monitor. And for example, today I'm going to be interested in the Euro Aussie, in the Pound Aussie. You can see that I have the Euro Aussie here, I have the Pound Aussie here. We have also, when we check the headlines on newspaper, information telling that the US dollar is weak, the pound is improving, or has somewhat improved yesterday. The Aussie has had neutral to bad news yesterday and the previous days. And so these are a combination of pairs we can watch for today, depending on what has happened yesterday, the day before, and the news for today. And so I will restrict my attention today to these 6 pairs. So, well, Chris, if you want to make the pause now, we still have 12 minutes at our disposal.
Sure. Okay. Thanks, Eusebio. So, hi everybody. For those that you have just come in, there's about another 20 have joined, so we've got about 60 people in the room getting there. It's just whenever we run a series of Max courses, and they start next week, just in case you have to do the sales thing, people always ask us how long will it take to learn to trade, and we've got a reasonable idea on it, but I thought I'd go a bit more scientific and ask you. I sent a survey out to our top echelon of course takers, not necessarily, I don't know if they're the most profitable, but they're taking most of our courses, and they are always giving us good feedback, and they gave us some nice, interesting results, at least the ones that replied. I won't tell you what they are just yet, but I'm going to ask you the same two of the questions. The third one required a bit of a few words to type out, and GoTo doesn't let us do that. So the questions are around, the first one is, are you consistent or not? And if yes, then you answer the second question. And the second question goes, how long did it take to become consistently profitable? Consistent just means that whenever you trade, you make money. If you have to, you can live off it.
Well, just to finish my small comment about the news and the top 10 list here on our website, you can receive every week these informations, and I think they are really worthwhile. I use myself because with Chris, Chris and I, we make that list every week. So you can subscribe for free here at the end of this web page. So just give your first name and your email address, and you will receive the update usually it's the Saturday, sometimes it can be the Sunday, so when it is updated on our website. So don't hesitate, feel free to use that information. So in 2 minutes we will get the news release on the pound. What I'm going to explain now during these 2 minutes is the following point. If we take let's take a pound pair, for example, the pound US dollar. I have drawn on my chart three vertical lines. Two vertical lines in orange representing respectively the Frankfurt Open and the London Open, and then in red the pound news release. We have a later one later, but it is just before the US Open. I have not drawn it on the chart because we will have wrapped up way before that moment. When we have such a news release close enough from the London Open, and I call close enough up to 1 hour and a half to 2 hours after the London Open, any movement which may happen during that time period, and sometimes even before, because some European markets start half an hour before the Frankfurt Open, so all the movement which may happen during that time period, when we have the last news release, and so today especially will be this time period, so all the movement may be at fix. And so when we have a valid setup during that time period, we have to be extremely cautious. And so the wisest decision is to skip that trade. But for those who are more experienced, it is possible to trade these movements, but considering the head fake is a high priority. And so we teach to our members, to our students, how to trade these head fake movement, or how to trade under the possibility of a head fake. We are never sure 100% that the movement will be a head fake, but considering it may be head fake, we teach them how to trade such kind of movement. And so if the setup happens under some circumstance, we can still trade these movements. Personally, I trade less and less these movements because I like to be much more comfortable in my trade, being a little older each year, so I appreciate trading without any stress, without any pressure. When I was younger, I was very aggressive on every type of movement. Today, if I make 1, 2, 3 trades maximum, I'm glad for that.
Well, that's interesting because the other question, which wasn't asked in the polls, was to the maxes, and it was, what's the main trigger for you becoming consistently profitable? And they said in general, no system hopping, focus on one market, set up a daily routine and stick to it. Don't try and get home runs. Just, not learning not to need home runs. Don't getting worried about it. Risk management and patience. So just very basic stuff. But the main thing that kept coming up was to stick with one chart and with one method and don't jump around all the time. So.
Okay, Chris, sorry. We have, you see here we have a 1.7% for the Halifax HPI, so way larger, way better than the forecast. So this is for me a big positive surprise. So this normally should make the pound strengthening. And we can see that the pound has been improving. We can see that on the pound US dollar. We can see that on the pound Aussie. We can see that on the pound yen. A few minutes before the news release. Sometimes this happens. Sometimes, for some news, the market anticipates what may happen for a very simple reason. Or there are two reasons, in fact. In UK, there are possibilities for some news for the big organizations to get them a little earlier than the official time release. And the second reason is the big organizations, the big banks have specialized economic departments making their own forecast. And they are very accurate in their forecast very often. And when they see that comparing their forecast with the forecasts which are published, that a surprise may be possible, they know in advance how they can position themselves in the market. And so it's not a surprise to see that there was some anticipation in the market. And so now that the news has been released, usually what we are doing is we wait a few minutes, and a few minutes means sometimes just 5 to 10 minutes, sometimes 1 hour, sometimes, but this is way less frequent, 2 hours. The longest time period I have had to wait for the price to stabilize, for the volatility to settle down, has been several years ago with the non-farm payroll. I have had to wait 4 hours before to see the market deciding a direction to take. But we can see that the reaction is not extremely violent. And so what we are doing now, we will wait for a setup to appear. And we have the pound strengthening. Of course, we can see that on the pound yen, on the pound US dollar. On the pound US dollar, we may have a setup appearing at the close of this bar in a few minutes. This is what we call a re-entry. The bar is not too long, but let's wait for the bar to close, because I see a very important counter indication for that movement. Yeah, the bar has closed. So normally this candle is a setup bar for a re-entry with the max ETF. It is not a setup bar for the max primer or the max light, and so the entry would be normally here. But this is a trade I don't take. The stop loss would be somewhere, let me check rather quickly, would be somewhere here. So it is a rather large stop loss. The stop loss of around 52, 53 pips plus the spread, 55 pips approximately, which is a big stop loss for the max ETF. But when I see that setup bar closing, I see also several counter indications. And let me give you just one such counter indications. The main concept for the counter indications is the following. If at the same time we have an entry setup, we have also one or several exit conditions triggering or ready to trigger, this means that sooner or later we will have the exit, at least one of these exit conditions triggering, and very soon, most of the time. This means that the risk is present, and so when we have a risk at the same time as the opportunity to open the trade, we consider the risk is way more important and we prefer to skip the trade. And I see at least two counter indication in this case. The first one is that sequence of candles. We call such kinds of candle a super long bar, and the entry is at the extreme of the super long bar. And a long bar, if you remember what we have seen last week in one of the trade I have described in details, a long bar, when we are in a trade, a long bar in favor of the trade is always a good opportunity to bank a profit and to reduce the risk we have on the position, because a long bar is very often followed by a retracement. So here we can combine several candles in the same color into one longer time frame candle, which will then be a long bar. And an entry at the extreme of a long bar is often not a good entry. And we can see that the price is now pausing, hesitating. Perhaps it will continue, but the possibility is high for the price to make a retracement. And this is why this is the kind of setup I skip personally. I prefer to skip a good movement than to be in a trade with a larger risk than usual. And there is another counter indication the max trader can recognize easier on this chart. So, but I will not go into the details here. And so this is why I don't trade this kind of situation. And we will see if this will be a missed movement, but I never care to miss a good movement. I prefer to miss a bad trade than to succeed a trade I would be forced to close as a losing trade. I prefer to wait for another better opportunity. This is the being more picky in my trade selection, and I have a tendency to privilege more and more this kind of behavior. In fact, being more picky in my setup selection. Hello, Davide, welcome. Lucia asked, did the ETF give an entry yesterday on pound to US dollar prior to the news release when the pair started the uptrend? Or around which time, Lucia? Let's have a look. Yesterday was here, and around this moment, around 9:30. 9:30, so it must be 10:30 on this platform. 10:30 is right here. 10:30 should be a news release, usually. And so the entry would have been indeed right here. Okay, but this would have been also a counter indication. Now, on such kind of counter indication, you can recognize we had again two counter indications. First of all, the proximity of our home base channel, and then, as you can recognize here, this one is a less important counter indication. We can still take such kind of trade, but with more cautious. So I would wait here, most preferably this setup here, and make the entry here. Okay. You can recognize the kinds of setup we have here. So we have a combination of two nice setup, one ETF setup and one max standard setup, and then trade the entire movement up to, if I draw my red magic red box, it would have been from this time period here up to this time period. You can see exiting the trade at this moment, at this stop, would have not been a bad choice. So a nice movement of around 170 pips. We would have missed that last portion of the movement, but without any problem. Okay? And if you had the other components of the max ETF, you would have stayed in the movement with that very small pullback and with that deeper pullback. This one should have produced also an indication of exhaustion in the other components of the max ETF. Okay? So you can draw the other components of the max ETF, and most probably you would have seen a counter indication anyway, even with the max ETF. Here we had on that area, exactly on that point, the setup, especially with that red candle. That candle was the last candle, the last exit setup to close the entire trade with an exit in this area here. You can recognize such kind of setup, which is an important setup in the max, and this is an important setup which is taught even in the max primer, and we can give the name of that setup. It is called the TP, the Tiger Pound setup. It is a very specific setup which gives around 85 to 90% probability to see the movement exhausting. And indeed, after that setup, the price has continued to retrace, and it has made a last push. This sometimes happens because we don't have 100% probability, but we had a nice confluence between that strong setup, exit setup, and our time period for the exhaustion of a true trend. Okay? It was, by the way, a nice movement with a rather small setup stop loss around 30-35 pips. Okay? And with a lot of opportunities to make scalings all along the movement. So let's come back to the pairs we are following here. We have a re-entry setup here in the, what we call a re-entry setup here in the euro US dollar with that candle here. No counter indication, and the entry was somewhere here. Okay. Normally what we like to see when we have such long bars, we like to see a deeper pullback. But because we have had good news on the pound, and the euro is somewhat linked also to the pound or vice versa, we can sometimes be a little more flexible. So let's consider this one. And the stop loss would have been large, and sometimes the stop loss, a large stop loss, may be a counter indication to trade also. In this case, the stop loss would have been, no, sorry, not there, because it is a re-entry, but here. The stop loss, let's check the stop loss size. Oh no, 42 pips plus the spread, 44 pips approximately. Let's write it on the chart, 44 pips. On the 5-minute time frame, with many pairs, the average stop loss size will be around 30 to 50 pips on average. And we require, in any circumstances, a minimum stop loss size, which will be, depending on the volatility of the pair, minimum 20 pips or 25 pips. For a pair like the Euro USD, the minimum size is 25. In this case, we have a stop loss larger than 25, so we have, and right in the average value, so we have a good stop loss size. Somewhat risky because the pullback is not deep enough, as I have explained. But we have other criteria which tell us that that trade is risky, and I can check very quickly. Yes, it is a trade which is risky in terms of trade risk management. So this is usually a trade we skip. Now I'm going to show you how we trade, how we handle a trade when we ignore the risk aspect. So this is a trade I don't take. This is what I call forcing a trade. But if we follow the rules of the max to handle the trade, you will see that if it is a losing trade, the loss will be a small one. So let's make that exercise here. And we will do the same thing with the pound US dollar. Okay? And you can see, by the way, that the price for the moment does not continue to follow through. And usually we have the following rules. Once we have a good entry setup, if everything else is good, if we have no counterindication, usually the price moves in favor of the trade within 3 bars. If after 3 bars the price has not moved away significantly, then the trade becomes questionable and more risky. So we have forced 2 trades, and so let's see how the way to handle them will minimize the loss if they turn to be losing trades. Okay? So we have, as I repeat, we had one or several counter indications for these setups. So normally we don't trade these trades, but if we force the trade and if we follow correctly the exit rules, we will minimize the loss on these trades. And sometimes they may be winning trade, but I consider that even if we close such a trade as a winning trade, for me it is not a good trade. So in fact, to give a little more information about the way we qualify an entry setup, we have 3 types of validation for a setup, for an entry setup. Entry setup validation. We have, in fact, let's say that 3 steps. The first step is the trade valid technically? So a valid technical setup. What does this mean? This means that the setup, the bar, which becomes the setup, must respect a series of conditions based on the indicators we have on our charts. Okay? For example, one of these conditions will be, do we have angle, separation, and correct order of our 3 EMAs? There are other conditions too. The second step is a trade risk aspect. This means with the trade we can associate a risk. Is that risk acceptable? And the risk we associate with such an entry setup is not necessarily the risk given by the stop loss size. Because this is not very important. By using the position sizing concept, the only risk we take is the financial risk. And so the size of the stop loss no longer matters. But we have another risk management, is the structure. The general structure of the setup is not appropriate. And we have 2 criteria, depending on the situations, which allows us to appreciate that trade risk aspect. And in both cases, that risk aspect was not good. And so these 2 setups do not qualify, in fact. And then we have a third one, which is the global context aspect. And in this case, that criteria was matched. For example, we were after an important news release, and we have plenty of time after the next critical time period. I call a critical time period a time we have to pay attention. Under the critical time period, we have the news release, but we have also other considerations depending on the timing during the day. And for us, an entry setup will be valid only if all these conditions are fulfilled. And in these 2 examples, the trade risk aspect was not fulfilled. So this is why taking that trade are considered as forcing the trade. and not a good trade, consequently. Okay? And sometimes they may end up as winning trades. And it will be possibly in this case. And I emphasize always on our students that the quality of a trade is not linked to the result of the trade. We may have a very good trade even if the trade is closed with a loss. A good trade is a trade which has been handled with all the rules. Which pair look at the Euro Aussie? Let's see if we have a setup. Euro Aussie was a setup but with exactly the same problem. Okay? Here on this candle. But with exactly the same counter indications. Okay? And you can see in this example, in this specific example, the price has moved somewhat and then has retraced very quickly, erasing. Oh, sorry, that's the euro yen. Oh, I'm sorry. I'm sorry for that. Euro, it was the next one here. Sorry for that. No, we don't have a setup yet here for the moment. We don't have a setup yet for the moment, based with the max primer or the max light. Okay? I don't see a setup for the moment. Now, for this candle in particular, no, there was no. You can see the configuration. The configuration of our three EMAs was not appropriate. Eurocad. You are going to make me crazy, Annika. I don't have the Eurocad on my in the selected pairs. No problem. No problem. We can check. We can check. We have time. The price is moving, so we will have very soon an exit conditions with the pound US dollar. So, but we have some time. So, let's take for example the Euro Aussie and change it with the Eurocad. Oh yeah, in the Eurocad it was clearer indeed. We had here indeed. In this case, yeah, a night entry setup, a clear entry setup. The pullback here made with these candles after these long bar was deep enough to clear that super long bar, and so a good entry here. The trade risk was okay, and the stop loss should have been right here. With a stop loss size of approximately, we have a spread of 5 pips, so around 35 and 540 pips. Okay, ESL 40 pips. And so we can follow also that indication. So a good view. And so what I can do is I can set the chart that way, in such a way we can follow the three of them, just to show the difference in the quality of the movement, but to see also that the way to apply the rules are exactly the same. Okay, this way. And in this case, yeah, we were right in the trade risk aspect management. The global context was now positive, so no counter indication for this one. Okay? Now we have here for the euro US dollar, this candle is a long bar. Remember, a long bar is always a good opportunity to bank some profit. The length of that bar is 23 pips. let's round it to 24 pips. So if the price retraces to that level here, approximately 1/3 of the length of the bar, I would consider banking some profit, even if the trade should have been skipped, and I want to emphasize on that aspect. But once we have forced a trade, we still have to handle the trade, okay? And with the price moving nicely, we have good opportunity to tighten somewhat the stop loss. In the case of the pound US dollar, the stop loss was around 53 and 56 pips. And then with the price moving, we can adjust the stop loss, reducing progressively the risk on the trade. Chris, there is an open mic. Can you mute it, please? Thanks.
Onto it.
So this bar will close in 1 minute. What I can do is I can set the clock on one chart. I should have a clock indicator here. Where is it? This one. Where is the clock? So this is not a good corner. 2 or 3. It is 2 or 3. I never remember the settings. No, it should be 3. I like to have my clock here on the lower right corner. At the close of that red candle in the Euro card, we have a top formed in the store RSI. Okay, so normally this is an exit setup bar, but the price does not meet all the conditions to close one unit. So I ignore what the store RSI is giving here. With the pound US dollar, we may have at the close of this candle also an exit condition triggering, but we need to wait for the close of that candle. And if this is the case, this will be an MX I will skip because it does not match all my conditions to make a first MX. An MX is closing one unit. But when we realize that we have forced a trade, if we have the opportunity to close one unit with a small profit, this is something I advise to do. The wisest decision would be to scratch the trade, of course. But before having some practice and some experience, some traders don't realize they have forced the trade. And very often a forced trade ends with a loss. And this is why also our practice session of the Saturday, we call the scrolling parties, are very important. They help to go through these kinds of trades and to see all the details which had to be taken into consideration in order to avoid the trade, or if the trade was a good one, to see how to handle the trade at best. Now, an error which is commonly made with an oscillator is, in this case, we have lower highs in the store RSI. This is not a divergence. To have a divergence in an up movement, we need, of course, to see lower highs in the oscillator, but also higher highs in the price, which is not the case. We have also lower highs in the price, so we don't have a divergence. This is not the definition of a divergence. I'm going to show you the difference between the max primer or max light and the, oh, by the way, the setup here was safe and perfect mode. This is the name of the setup on the EuroCAD. So safe and perfect mode. In the case of the Euro US dollar, it's what we call a re-entry. And in the case of the pound US dollar, it's also a re-entry, but an ETF re-entry. With the ETF here on the EuroCAD, let me show you the difference between the entries, but it would have been a dangerous entry because of the news release. But in the absence of the news release, you would see where the entry could have been made. Right here on this candle, which would have been our setup bar, and the entry would have been made here. Or here, depending on the entry styles. Because for each entry setup, we have different entry styles which are more or less aggressive. So now let's check here what is happening. On the pound US dollar, we have on this candle an exit setup bar. And so the exit, because we are in a forced trade, would be made somewhere. I'm going to draw an horizontal line. Let me adjust the line here. Somewhere here. The price is hitting that line. Okay, the exit is made here. So this would be an MX. Now, with a valid trade, which was not the case here, that MX for me would have been skipped because the profit is not enough. But in a force trade, if we recognize that we have a force trade, this is an MX I recognize to do in order to reduce the risk on the trade. The best decision, as I have said, would be to scratch the trade. So 10 pips minus the spread, let's say 3 pips, 7 pips, which is not a big result, of course. It is a very small result, which is not a surprise because the trade had several counter indications. And of course the stop loss can be adjusted that way, even here. And you can see in this case that that profit is not enough to cancel or to balance the remaining risk we have on that position. Now we may have again here an exit setup bar on this candle, most probably at the close of this candle, also on the euro US dollar. So, but we have to check for the close of this candle in 2 minutes. Should the price move fast in the pound US dollar and hit that stop loss, the loss on the second unit would be 31 pips plus the spread 3 pips, 34 pips. 34 pips minus 7, this represents 27 pips loss. 27 pips for 1 unit represent 1/4 of our initial risk here. It is half of the size of the stop loss, but it is on 1 unit, so only 1/4 of 1 R. So anyway, a small loss. You can see 2 different types of situations here in applying the rules, especially the exit rules. In one case, the pound US dollar, the price has hit my exit level. So an exit is always made into 2 steps. We recognize, first of all, an exit setup. And once we have an exit setup, we define an exit level. In this case, the exit level has been hit, and so the exit has been made. There are rules to define where the price must go to make the exit. And in the case of the euro US dollar, we had the exit setup bar, my exit price level, but the price has never hit that level. So we don't make the MX in this case. We stay with our 2 open units. Okay? Similarly, for an entry, we have always 2 steps. We have, first of all, to recognize an entry setup, and then, depending on the entry styles the trader feels comfortable, we define where to make the entry. We have several entry styles, from the most conservative to the most aggressive way to make the entry. We have 4 or 5 entry styles. Now, usually when we have a pullback with the max standard or the max ETF, we have also possibilities to make some scale-ins, as we have seen last time. And you see here the red diamond. When it will be followed at some point with a green diamond at the end of the pullback. When that green diamond will appear, this may be with at least the max standard and then the max advance and the max ETF. When we have the entire template, it can be an opportunity to make a scaling. And you can see in particular that in this re-entry would have been itself a scaling, because we have the green diamond here, should that entry here be taken, which was not the case because of the news release, of course, and because of the long bar here. This candle here represents an exit setup bar based on the price action. So normally somewhere in this area an exit is due. Let me check carefully. Right. The numbers are becoming smaller and smaller on the screen here. But this is the kind of MX I would skip. Sorry. Oh, no. I have to pay much more attention. 18 pips minus the spread 4, 5, 13 pips. Yeah, it is too small to take the MX. So normally here we have an MX, but my rule is I use the second possibility to make the MX. I make my MX only if the profit is large enough. It is not large enough. Personally, I don't take it. And so this setup bar is based on a specific price pattern we have. Remember, we have several types of exit conditions. We have exit conditions based on the behavior of one or several of our indicators. We have exit conditions based on the price action itself. We have exit conditions based on the invalidation of the movement, and we have exit conditions based on the timing aspect. In this case, it was a price pattern exit condition. And here, most probably, we will have an exit condition, but in this case, let's see. No, the profit will not be large enough, but the trade risk management was not adequate. And so we have to wait. I will see at the close of this candle. We have a spread of 2 pips approximately. The profit is 19 pips. 19 pips, no, it's not big enough to consider for me, based on my rules. But because we are forcing the trade like the pound US dollar, so I would advise to take that MX. So here. But normally, in normal conditions, this is a profit I don't take. It's not large enough. So here MX1, and I have said how much, 19 pips, so 21 minus 2, yes, 19 pips. Not minus, but plus, of course. Then we can somewhat adjust the stop loss by a few pips here, and the remaining risk on that stop loss is 24 plus the spread 26 pips. You can see that the profit is not large enough to completely balance the remaining risk. We are still under a potential loss, but a very small loss. So 26 minus 19, 7 pips, which has to be compared with 2 times 44 pips, less than 0.1 R. And in the case of the pound US dollar, we have a risk of 20, let's say 27 plus the spread 30, 30 minus 7, 23, 23 now this is less than 1/4 of our initial risk. So Davide asked, quite hard to trade and learn simultaneously. Just entered the position on ES long, but I like what I see. Yeah, Davide, this is indeed very difficult to learn and to trade at the same times. And this is very often a comment I have. I have had the opportunity in the past to participate to some trading rooms, and I have seen that it was always extremely difficult in these trading rooms to call the trades at the same time as the moderator was teaching how to trade. And so if it is difficult for the moderator or for the trader, it is also difficult for the retail trader. And I don't know what is the best organization for a trade room, but making both activity is not the best way to do, I consider. Perhaps an organization would be to have 2 different rooms. One specifically dedicated to the teaching, to the learning, and one dedicated to only trading. And in the training room, any questions can be asked, for example, but in the trading room, normally no question should be asked. And normally the guy who is conducting the trade should give no explanation, in fact. Perhaps just calling the trades, and that's all. The simple fact of explaining the thinking process is an important waste of time, in fact, for the trader. And sometimes this forces us to mark our decisions a few seconds too late, which can give the impression that the decisions are made afterwards. This is why whenever I have the opportunity in this kind of presentation, I like to explain in advance what will be my thinking process, in such a way there is no ambiguity. Okay? And this is especially the case with small time frames when we consider several trades simultaneously, several pairs simultaneously. And this is why with a small time frame, trading requires a lot of concentration, a lot of attention. But the rules are always the same, and this is why the practice, in fact, must have the result that the rules become a second nature, in such a way that there is no need to explain the rule. You see here in the case on the pound US dollar, now we have the green dot. Normally, should this trade be a valid trade, this bar would have been a setup bar for a scaling. We have with the max standard and higher level of the max other conditions to be fulfilled. So perhaps this would not have been a valid scaling, but you get the idea. This is a potential setup bar for a scaling. When we have that green diamond along a long trade. You see here in the case on the EuroCAD, this is something which happens very frequently. It was indeed a valid trade. All the conditions were fulfilled. And that first exit I have not taken. I have explained why I have not taken it. Very often is followed by a pullback. Now the price is reversing. This sometimes happens too. And if I have to scratch that trade with a loss, it will be a loss. And so that's not a problem. in the meantime, what you can see is one of the criteria we have to adjust our stop loss is following the blue balance line. There are other conditions. But you can see that even in all that area, see, the price finally has made nothing special. But because we have inertia in our moving averages, the blue balance line continue to move upwards. This helps to reduce the risk on the trade. Okay? And this is a positive aspect of a moving average. The lagging aspect of the moving average can become an advantage in this case of situation, in this way of using a moving average. Kurt says, so do you offer trade room for the new customers, even primer customer? We don't have a trading room, Kurt, because we are not licensed to call trades. But from what we do from time to time, I think we do that once every 2 months or 1 month, we make a workshop. And a workshop is a live session as we do today. And the workshop is dedicated with one specific approach. Sometimes it will be the primer, sometimes it will be the standard, sometimes it will be the ETF. So each workshop, yes, indeed, has a specific approach, but it is not systematic. Okay? It is more a way to illustrate in real time how to apply the rules than to call the trade. We don't have the right, unfortunately, to call trades. But we like to do these live workshop because this is the way to illustrate the way to apply the rules in real time without having the right side of the chart. And to make our students realize that applying the rules in real time is exactly the same way as we do during our practice session. We don't need to know what will happen. What we need to know is to master the rules, to know how to apply them, when to apply them, whatever the price is doing. And during our practice session, we always take the precaution when we have to apply a rule to ignore what the next bars are doing. We have to set a mindset in such a way to force our brain to ignore what the price has made in the future relatively to the bar we are examining, which is not easy to do. Okay? But it is a good practice, especially when we have to switch then in live conditions, when we don't know the future. Now, with this candle, the price is entering into a consolidation zone mode, and it is even a rather tight consolidation zone mode. Remember, I have said that usually when we have a good setup, and this was a good setup, usually if the movement is a good movement, the price will move in favor of the trade within 3 candles. Now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles, and the price is not doing nothing. And now it's entering into a consolidation zone mode at the close of this red candle. And when this is the case, one decision we can do, we never know how long the consolidation zone mode will last. One decision could be to scratch the trade, taking the result, positive, negative, or break even, or to stay in the trade, waiting for the breakout of that concession zone area. Personally, because we never know how long a concession zone will last, I prefer to scratch the trade and look for other opportunities. So in this case, the trade can be closed with a small profit. You see here, we had the opportunity to scratch the trade around this area with around 10 pips minus the spread, so let's say 5 pips profit, or now at break even, so no problem at all. it's not necessary to waste time on a trade which is making nothing. It's better than to check other opportunities in the other pairs which are monitored. And again, the pairs are chosen based on the event during the day, the news release, for example. Now, with this candle in the pound US dollar, which will close in 2 minutes 40 seconds approximately, if that candle closes as a red candle, now we will have a divergence on the store RSI because we will have higher highs in the price, and we will have lower highs in the store RSI. This is a bearish divergence, provided that candle closes as a red candle. And so we always wait for the candle to close. For every setup bar, either an entry setup bar or an exit setup bar, we always wait for the bar to close before taking the decision. And if this is the case, this will be an exit setup bar, and then the second step will be to fix the exit price level. And if the price hits that exit price level, the second unit of the trade will be closed. Less than 1 minute for the bar to close. Now, it is not a surprise to see not so much movement today. There is a reason for that. Can you imagine what is that reason? Indeed, Luca, you're right. Indeed, Ivan, you are right. In fact, there are two reasons. The reason you have given, the non-farm payroll, is one of the reasons. There is a second reason. So here will be the exit price level to close that trade. The Bank of England, yes, Luca, that's right. And here that trade is closed because the price has hit our exit level. Okay? Right here. And so this is the XXX of the trade. 16 pips minus the spread, let's say 3 pips. 13 pips with a trade which has been forced. Okay, so not a trade to take. And it is not because that trade has been closed with a profit, even a small profit, that it is a good trade. For me, it is not a good trade. Plus 13. Okay? In this case of the euro US dollar, it will depend on the nature of this candle. We don't have an exit condition. Oh yes, we have an exit condition. Sorry, here. The store RSI has given a top at the close. No, sorry, the MX has been made. So we have to wait for the close of this candle. Maybe we will have an exit condition based on the price pattern here. But we have to wait for that candle to close in 3.5 minutes. And so in the meantime, we can clean the chart, we can make some annotations on the chart to save the chart. So here we can say, for example, that the trade 1 has made plus 20 pips, and the reward to risk ratio was, so we take 20 pips, we divide by 2, and then by the size of the stop loss, so 10 divided by 56, a very small trade, plus 18R, plus 0.18R. And then I would add another very important notations, forced trade, and in my trading journal I will explain why this was a forced trade. Okay? Yeah, Luca, I always mark my chart with the max conventions before making a screenshot of the chart. Always. And even when I trade with another platform, for example, with the platform of Interactive Brokers or the Java platform of Oanda, I replicate my chart on MetaTrader, and because especially with Oanda, but also with Interactive Broker, I don't like to use the MetaTrader bridge of these two brokers, but so I cannot make a screenshot with the max template and the max notation, conventional notation. So I replicate the notations on my MetaTrader platform, and I save the screenshot on MetaTrader. Or it does not take a long, so long time period to make the notations. And so once the trade is closed with one pair, we wait for another opportunity on the same pair or on another pair. Okay? It is very important to save the screenshots of your trades, because a good practice is at the end of every day or at the end of every week, it is important to make a review of each of the trades and to compare if all the trading decisions have been correct or not, or to see if you have missed some rules to apply. And so this is the post-trade review, and by pinpointing the errors, this is a way to learn to avoid them in the future. Now, when you see that a trade has been handled perfectly, you have missed no rules, then you can mark also on the chart perfect trade, and you can back yourself because you have made a perfect trade, whatever the result of the trade. Okay? So this red candle closes in such a way that we don't have a price action pattern exit rule here, but we are still in the timing to consider that next candle. So the way that candle will close will be determinant to see if we will have here a price action exit rule. Just to remember to the members who are following this session live or with by watching the video, the templates, the indicators we have for the max are basically for the MetaTrader platform, MetaTrader 4, but they are also available for NinjaTrader, for TradeStations, for multi-charts, essentially. And so when you become a member, at the end of each course, you have access to the appropriate area of our forums, which is free of charge. And in that forum, you have the availability of these templates and indicators for the other platforms. You can see in particular for all that entire movement, despite some volatility in some candles, how these two lines of our max ETF indicator are very, very regular. And this is what makes it very comfortable to trade with these lines on our charts. They help us to pinpoint very quickly when the price is reversing. We cannot pinpoint exactly the top or the bottom, but we are very close, and they are a great help to stay in the movement even when the price makes some deeper pullback, like that pullback here. The price has made a top here, has made a low here, so the distance between that top and that low was 23 pips, but you see no impact in our ETF lines. So Davide asked, this was one of my questions in case I will decide to learn better the system as I use NinjaTrader. I don't trade any OTC instruments. You anticipated me. Okay, Davide. Yeah, you know, NinjaTrader is a nice platform. It has also its small problems. But it is one of the most appropriate platforms to trade the futures market, for example. Some brokers using or proposing NinjaTrader allow also to trade the stock market, to trade Forex also, the Forex and not the currency futures. Of course, in the futures market, you can trade the currencies future, of course. In the past, I have used also TradeStation, which is a nice platform, but I found it has too many options, somewhat complex to use. It requires a lot of practice, mainly when we want to use its nicest features, which help to automate some aspect of trading. NinjaTrader is a nice platform, and I'm considering more and more myself to switch on a NinjaTrader platform.
Hey, Eusebio.
Yes, Chris, please.
Hi. Sorry about the echo. I've been relegated to the other end of the house to keep the noise down. Just on the other indicator side of things, it's our members have supplied us with the indicators for things like NinjaTrader, TradeStation, multi-charts, and Forex Tester. And if you've got another platform that you want to use, then we're quite happy to supply you with the MetaTrader source code, and so that you can get it ported over to that other platform. The indicators themselves are pretty standard, so there's not that much work to be done. But there are a couple of little twiddles that we do with some of them, but nothing drastic. And just commenting on your trades today, Eusebio. Eusebio forced his trades today to show you, one, because there wasn't any really good trades, but to show you what happens if you get into a trade that's not going well for you, and how you can get out with minimal losses, as you can see the way Eusebio went through here. So it's not the way we'd normally trade. And in fact, when I'm doing the training, I do the standard training. I kind of tell people that we show you how to get into the trades, but more importantly, we show you how to not get into them as well. In fact, there's more rules for not getting in than there are for actually getting into the trades. So it's more a not trading situation.
For example, in this case of the Euro USD, which is the remaining open, I consider this trade as being scratched, as I have explained previously, and let's consider the worst case scenario scratched at break even. Okay. So in this case of the Euro USD, what may happen? A possible scenario would be the price continue to go downward here without triggering any of our exit conditions. This sometimes happens. And so this is when we have our concept of the movement invalidation. And for what I see on the chart now, the movement invalidation would appear somewhere in this area. And you can see that in this area, we are more or less at break even. And so in the worst case scenario, that trade will be closed with a profit, a small profit, but a profit. But again, I will mark on the chart forced trade, because it is a trade in real time I would not have taken. And so sometimes we will close such trade with a small profit, with a little larger profit, sometimes with a good profit, and sometimes with a loss. But in the case of a loss, it will be always a small loss. Okay?
Eusebio, just a bit more on the platforms.
Yes.
Okay. When we do the training, we use MetaTrader as the platform that we train on. You don't have to stick with it with your trading. But we ask people to use MetaTrader from one particular broker. We don't care about the broker. We don't recommend any. But so if everybody has the same broker, then all the candles are going to be the same. Even on a 5-minute chart, if you get two different brokers, you can have different candles displayed. So everybody uses the same broker. So when you're comparing your chart with somebody else's, you can you're comparing like with like. You're not seeing strange things popping up on your charts. And what else? And somebody asked about if we do live sessions. We don't do, like Eusebio said, occasionally we do a live session. Sometimes they're paid for, sometimes they're free, like this one. And they're at various levels of the max methodology. Some of them are primer light charts like these are, and some of them use the more heavy-duty advanced stuff, which get a lot more entries and do the profit acceleration. But on the weekends, we run practice sessions. We call them scrolling parties. They run for between 2 to 3 to maybe even 4 hours. And if you ask us to walk through a chart for you, like for instance one of these, we'll go through it generally candle by candle, perhaps even tick by tick, just to analyze the hell out of it so that you understand what's actually going on with it. And they're for your benefit. So Eusebio comes along and there's lots of questions, so the candle will unfold and you'll be asked, okay, is this a setup candle for an entry or an exit? What should you be doing here? That kind of thing. So it really hammers in what you know. And it throws up lots of questions and uncertainties. And by being able to do that and be able to have it analyzed on the fly for you, you learn the method much, much faster, become more proficient at things. Okay, back to you, Eusebio.
Yes. Concerning the chart, the quality of the chart, using the same platform with a demo account, you have indeed the same data feed, which is not necessarily the case with a live data feed. You need to know that if you open two accounts with the same broker, you will not necessarily have the same data feed. So you may have some small differences on your two charts, because the broker with MetaTrader has the possibility to custom the data feed for the entire customers, or by group of customers, or group of accounts, or even by individual account. So he has that possibility. So pay attention to that when you compare two charts from the same platform. I was explaining that when we scratch a trade because the price is doing nothing, or because we have realized that the trade was not a good trade, it was a forced trade, so the best decision was to scratch the trade, you can in the meantime check other charts, of course, you are monitoring. And remember, one of the charts I had opened, I had 6 open charts, was the Euro-Yen. And with the Euro-Yen, after the news release, you can see that the price has become the price has made a pullback. The pullback in our case has been deep enough to clear these long bars. This is a rule we have with the max. And then we have a nice entry here, which is what we call also a re-entry. The price was becoming progressively more regular. We like regularity in the price movement with the max, with an entry in this area, a stop loss in this area. The stop loss size was 27 pips plus the spread 3, so 29 pips, and then no exit rule for the moment, except perhaps that one after a movement of a good 20 pips, which would have been a profit interesting to take in this case. But the exit rule has not triggered yet. Okay? So this is something you can do while you are waiting for another opportunity to trade. And what I would perhaps do is, because we have still some minutes before we wrap up, let's follow somewhat this chart here to see what it will give. Because it was a good trade, following all our rules, no counter indications, and so a perfect movement, and not a forced trade. So we have 1 minute before this candle closes. Let's see if this candle will be an exit setup bar.
I'd just like to say that one of the things that Eusebio has not shown today is how we accelerate the profit, how we scale into a trade. So,
yeah.
So far everything has just been a straight entry and an exit. Eusebio hasn't piled in on the trade, milked the trend, as we say.
Yeah, no, in fact, we are facing the Bank of England official bank rate announcement in around 2 hours. We have the non-farm payroll tomorrow afternoon. Chances to have large movement allowing scale-ins are smaller, and usually starting 24 hours before the non-farm payroll news release, I cool down in my trading. I take less scale-ins when they appear, because usually 12 to 24 hours before the non-farm payroll, the markets are calming down, especially in the context we have with the Fed. You know that the Fed has a very difficult decision to take, and more are inclined to think that they will not be able to increase their interest rates for some time. But we never know with the Fed. We never know. But it's clear that they will monitor 2 important fundamental data, the employment and unemployment level, and the inflation. And so Yellen has been clear about that again in the last announcement. And so you have to watch closely, very closely, all the U.S. news related to the employment, the unemployment, and the inflation. Because this will give you a clue about what the next decision by the Fed will be.
In case you don't know, one of the important parts about our scale-in method is that on a, say, a 50 pip or a 100 pip movement, just one scale-in can increase your profits by another 50%. This is why on our website we have that outrageous thing of saying we can increase your profits 30 to 300%. And it's not a joke, it's for real. So just one scale-in can really make a huge difference to your trading capabilities. And
Yes.
What we've found is, or what a lot of people say is, they've been break-even traders until they start learning the max. And then when they learn how to do the scale-ins boost them from just break-evens and pushes them into the profitability area. And so at that point, because they're a bit more profitable, they become more relaxed and not so many psychological hang-ups, and so they make more money as a result. So it's kind of nice, like a nice self-fulfilling prophecy there. But the scale-ins take people from being, a lot of people from being break-even traders to profitable. Thanks, Eusebio.
You're welcome, Chris.
Cool. I get to assist you this time.
Yes, thanks. I don't feel alone.
Yeah.
So if this candle on the euro-US dollar closes as a red candle, we will have most probably an exit setup bar, but it seems the price wants to continue higher.
And on the sales side of things, the other thing that we do with the Max that I think is a bit different to most other training sites is that we assign homework. So at the end of, and you would have seen this in the presentations that we do, but the homework is really important. It means that we can check that you understand what we're talking about. It's not a punishment or anything like that. We want you to succeed, and if you don't understand what's going on, we can see it straight away in how you mark the charts up. So, and the homework looks just like how Eusebio has marked his chart up here. When you send it in, we go through it candle by candle and make sure that you've entered and exited at the right spots and made all the proper annotations and stuff like that so that everybody understands what you're up to. And because of the way we do it, you get to see what everybody else's homework looks like as well, and it kind of reinforces things. Okay. I'm finished, Eusebio. Thank you again.
Yeah, the homework, as Chris has said, is not a punishment. And the most important aspect of the homework is to, for you, to be sure that you apply the rules correctly. You don't need to convince us that you apply the rules correctly, but you must convince yourself that the rules are applied correctly. And to do that, we have the homework. And so we grade the homework, we indicate very clearly what has been done correctly, what has been done wrongly, how to correct things in such a way that you realize what you are doing fine and what you are doing wrong and what you are missing, possibly. A student must never convince his teacher, but must convince himself or herself she is doing right.
It's always nice when the signal bars are all green, Eusebio.
Yes, but sometimes I found it very frustrating when the price is moving straight away without giving any exit condition, because this forced me to stay a long time in front of the chart. And sometimes it becomes very, very boring. Trading can be very boring.
Yes, just watching all those pips fly into your account. Yeah, it is more interesting when there's a little more volatile, more scale-ins as a result. It's not just...
Yes, but in such a straight movement, there is no scaling opportunity here.
Yep.
I can show you that. I'm sure of that. Where is the indicator? It should be here. This one. You see one green arrow here and no other diamond, no red diamond, no other green arrow, so no scaling opportunity. Now with the max advanced, we have a more complete template. With the max advanced level, we have the possibility for sometimes additional scalings. And so even if in the max advanced we cannot scale in this movement, sometimes we may have that possibility with the max advanced. And sometimes also with the max ETF. This is why these upper levels of the max are very, very interesting. But to go into this higher level of the max, it is a necessity to master the basics. No, we have no opportunity to scale in here. You see how when the price is moving, is nicely trending that way. You see how these two max ETF lines are extremely regular. And you can see here all that choppy behavior in the price movement after the news release has not affected at all our two ETF lines. So no reason to exit in this area. Perhaps should the trade been opened earlier, reduce the position size, reduce the risk, or banking some profit, especially if the trade would have been opened earlier, which I doubt because of that important news release. But the news release was on the pound. Oh yeah, there is something I would like to explain here. We have news release on each currencies. The US dollar, the euro, the yen, the pound, the CAD, the Aussie, the Swiss, and the Kiwi. So we follow only these 8 main currencies. When we have a news release, we first of all classify these currencies into several types. And for one of these types, when we have an important news release with a big surprise, the impact will be on all the pairs, even the pairs not containing that currency. Then we have a second group of currencies, and when the news release on one of such currency has a big deviation, the impact is only on the pairs with that currency. And then we have a second group where the impact can be on some of the pairs or all of the pairs. With the pound, we have such a behavior, and with the housing price index, a big surprise in the housing price index has no impact on the other pairs not containing the pound. So this was typically, Chris, can you mute your mic, please? Thanks. This news release on the pound, for this pair especially, could have been ignored. And so this situation here would have been profit-taking. So we have 20 seconds before the close of these two candles, and they will be exit bars in both cases. And here the exit level will be somewhere here for the pound, and here for the euro US dollar, based on my own trading styles. Okay, in the euro yen, the MX could be is made right here. Okay, with we may have sometimes a slippage, depending on how fast the price moves or how fast the order is executed. And so this MX gives a result of 25 pips minus the spread 3 pips, 22 pips. So plus 22 pips, plus 22. For the euro, we are still waiting to close the trade, the second unit of the trade. This happens now. the price has crossed. We may have perhaps a small slippage in this case. And so here we have the XXX for this trade, with this fourth trade, don't forget that. And you see the close of the trade has been made before the movement invalidation, which in the meantime has moved somewhere here. And so that XXX has produced a result of 27 pips minus the spread, 25 pips, so plus 25. Okay. So in the case of this fourth trade, the trade has given trade 1, if it is the first trade of the day, plus 44 pips with a reward to risk ratio easy to calculate here, plus 0.5 R, because we divide 44 by 2 and then by 44, and so we have half. And I'm forced here to note on the chart fourth trade. When you journal your trade, always be honest with yourself. Have the courage to recognize your errors, because by recognizing your errors, you will have the possibility to correct these errors. If you negate, if you refuse to recognize an error, how can you improve yourself? So be honest with yourself. You have never to make reporting to something else except for yourself. So be responsible for yourself. Okay? Being responsible for yourself is the best way to improve yourself. Now here in the case of the euro-yen, with the price moving in favor of the trade, the stop loss can of course be adjusted. We have sometimes to fight with MetaTrader. The movement invalidation in this case is somewhere in this area before the stop loss can be reached. And you can see that in this case, in the worst case scenario, the second unit of the trade would be at a profit, a small profit or break even at worst. So this is a sure profitable trade in this case, even if the price drop quickly and hit our movement invalidation area. And so you can see the conclusion of today, because now it's a good time to wrap up, except if you have some last questions. By being very attentive to all the rules we have many exit rules. They are classified in 4 categories, as I have explained. We can be very accurate where to make our exit, and when we use all of them without never neglecting them, we can, in the case of bad trades, we can always minimize the loss should the trade be closed with a small loss. In these 2 examples, on the euro US dollar and the pound US dollar, or it was the pound US dollar, I think, yes, or the pound Aussie, no, it was the pound US dollar. Here, it has happened that the 2 trades have been closed with a profit. This is not always the case. With the fourth trade, most of the time, the trade is closed with a loss. Okay? But even in this case, by being extremely attentive to all the details, we minimize these losses. But the best way to avoid them is to never open a trade when the trade does not fulfill all the conditions to open the trade. And this is what we teach in our course. As Chris has mentioned, we pay much more attention how to avoid a trade than how to open a trade. So I see questions by Paul. So in your last webinar, you had mentioned that one has to pay taxes on FX profit in Belgium, or did you mean only France? I had once heard that in Belgium there is no capital gains tax on trading. Am I wrong on this? In your last webinar, you had. Oh, it is the same question. Oh, Paul, in France, the Forex profits are taxable as business profits. In Belgium, it is normally the same case, but in Belgium it is a little more complex. The decision to tax your FX profits or not very often is left to your taxman, and he will or she will appreciate the nature of your revenue. If you have two revenues, one revenue coming from a normal job and revenues coming from the Forex, if your revenue from the Forex is less than your revenues, your other professional revenues, the taxman can decide to not tax your Forex profits. Otherwise, he can decide to tax your Forex profit. Now, if these revenues are the only revenues, they are taxed. The Forex profits are not considered as capital profits. There is a distinction in France and Belgium between the profit made in the stock market, in the options market, in the futures market, and in the Forex. The Forex is a complete different category of results, unfortunately. In Europe, the best country to avoid profit taxation is countries like Switzerland, for example. In Switzerland, the Forex profits are not taxable at all. So in Belgium, the problem is a little more complex. You can negotiate with your taxman, but good luck with that. So my rule with my taxman, who is in my case a taxwoman, I am always very kind with her, because when you are kind with them, you can obtain a lot of things. And it's always better to ask first before filling your tax documents, instead than to have to justify yourself afterwards. And so my advice would be to contact the tax person before you fill your tax documents. And it's not so easy to have correct information, and sometimes you need even to call the finance administration. And even there, it's not always easy to find the appropriate person with the correct knowledge. You can see in this case of the euro-yen, we have a fast down movement. We had a first exit rule triggering after that red candle, which was an exit setup bar, but after that the price is dropping without giving another exit rule. And so we never know how far the price can drop, so we never allow the price to drop too far away. We know exactly at any moment where the trade will be scratched or all the remaining opportunity will be closed in the case the price continue to drop. And we call that concept the movement invalidation, which comes also from a concept I teach in the Max Advanced course, which is the concept of the max waves. We can always decompose a price movement into several types of waves, and in fact, the movement invalidation corresponds to the end of one of these waves types. A question I would like to investigate one of these days when I will have some times is, in UK you can trade what we call, how it is called, that these kind of instruments which replicate the Forex, and they
CFDs.
which are not, no, not the CFD, which are not taxable. Spread trading. And so in UK, when you spread trade, you avoid tax. They are not spread betting. Yeah, that's the exact appellation, the exact name, spread betting. the profit you make on spread betting are not taxable in UK. And so an interesting question for people living in Europe, in many countries in Europe, France, Belgium, Luxembourg, would be, if we spread bet in UK, are the profits we make taxable in our own countries? And so I think asking such question to the administration would be to give them nightmare to give the correct answer. But it's not forbidden. You can open an account with a broker proposing spread betting. And so, but be prepared before doing that. Always be prepared. A good preparation is always the best solution to avoid problems. So let's see for still, let's consider, on my time zone, it's 11:22. So let's wait until the bottom of the hour, so 8 minutes. And in 8 minutes we will wrap up here. And let's see in these 8 minutes what the price will do.
Well, in that case, Eusebio, I'll jump in with a word from the sponsor.
Okay, no problem.
Okay, sure. So next week we're starting with the primer course, which is just a taste of what the Max can do. It's essentially with the charts that you're looking at here on the screen. The primer has got a couple of entries in it, 3 or 4 exits. It is profitable, but there aren't as many entries as you would get out of the other courses. Starting next week also is the flagship course, which is the standard course. And the Max Standard it's got pretty much, it's the very first course that was started. It's got all the profit acceleration in it and all the exit techniques. And you need to be able to do the standard course in order to do the more advanced things like ETF, which Eusebio has been showing you, the SAM and the advanced courses. So if you are competent or reasonably competent and know how to trade at the moment, have at least 4 months experience, as Craig keeps writing, then jump into the standard and take off. If you're not, or you want to test us out first, then go for the primer. There are discounts running at the moment. They should still be going. If they're not, tell Craig that Chris said that this discounts are still valid. It'll shock him a bit, so that you can get in on them. And the discounts are quite large, so about 50% for the primer course, bringing the cost down to around about $160, I think. Sorry, I don't have the numbers in front of me, not at my PC. And the standard course is around about $2,500. I think a bit less, I think, but of that magnitude anyway. And the standard has got 7 different entry techniques, plus variations, which brings it up to about a bit over 10 entry techniques, and a plethora of exit techniques. But with the exit techniques, once you learn one set of them, you can replicate them to other indicators. So even though it sounds like there's a huge amount to learn, once you learn one thing, it can be easily duplicated around the place. And the standard course takes 7 weeks of work and homework to go through. Okay, thanks, Eusebio.
Thanks, Chris. Hi, Brian. Nice to see you. For a long time.
Yeah, it's good, Brian. We're just wrapping up.
Yeah, for those of you who know the Max, you can see that here we may have possibly an exit setup preparing. This candle, which is forming, will be determinant to see if it will be a setup bar or not for what we call a TP, a Tiger Pounds setup. But we have to wait for the close of this candle. And if it closes appropriately, we will have the exit setup bar, and then if we have the setup bar, I will fix the exit price level for the exit, and if the price hits that level, then the trade will be closed. Unfortunately, Brian, we will wrap up in a few minutes, but indeed it's always better late than never. But I'm glad you are here. If I remember correctly, Brian, you have been also one student of Jim himself. Am I right?
Yes, Jim and Brian used to have discussions. You said
yeah, I remember something. Yeah, I remember. It was in the beginning of 2008. It was fun. Now, this candle, for the moment, has the feature to become a setup bar for a Tiger Pounds setup. But we need to wait for the price for the candle to close.
Can you zoom in a bit on the chart, Eusebio? The candles look kind of wispy here.
Yes.
Thank you.
And in the meantime, we have a re-entry appearing also on the euro-US dollar, but in the context of a tight concession zone. So we need to wait for the price to break that concession zone. So let me zoom entirely the chart. Do you see the candle correctly now?
Yes, but a bit bigger though. Can hardly see the wicks, Eusebio.
Okay.
Oh, that's better. Thank you. Yeah, much. We're not all young men like you.
I will add also the candle on this chart because I don't see correctly the time zone at the bottom of the Market Watch panel. It is too small. I need to check my glasses, I think, one of these days.
5 seconds left.
Thanks. No, 50 seconds.
Oh.
Let me take off that yellow box. That way. $33. We are almost sure now that we will have the setup bar. The only case this candle will not be a valid setup bar is the price to move quickly upward and go higher than this high of the blue candle. Okay, this is the setup bar, and the exit will be, let's see, here in this area. The price has not hit that level yet, but this is a setup bar we call a TP pattern. Okay, the price is hitting my exit level, so here we have our XXX. I can check the low of this candle is 0.179, which is a little lower than my blue line level, so the price has hit that. Now in real time, when we have to push on the exit button, sometimes we don't have the time and we see the price coming back, in which case so we don't push the button. But let's suppose the button has been hit, so we have our XXX here. and the x-axis is being closed with a result of how many pips. So here we have 13 pips minus 3 pips for the spread, so 10 pips. Okay, so again, a fast trade in the present context. And so we can annotate the chart. And if you had not time to push the button, you are still in the trade and you will wait for the next exit setup or the movement invalidation. And so here we can annotate the chart. So trade 1, if it is the first trade of the day, plus 32 pips, which represent a reward to risk ratio of around half, plus 0.5 R, exactly 0.53 Rs. Okay? Now, if your risk is 1%, that trade has produced a half percent profit on your account. If your risk is 2%, that trade has produced a 1% profit. Okay? Well, do you have some last questions before we wrap up this session today? I hope you have enjoyed again this session, seeing how the max rules apply, the discipline which requires to apply them, the fact that we need to know all the rules and to know when to apply them, and especially today, this was two nice examples with the euro US dollar and the pound US dollar, to know that even if we force a trade, if we are very attentive to apply the rule, we can minimize the impact on a bad trade. And sometimes we may have a positive result, but this is still a forced trade. Okay, so not a good.
Thanks, Eusebio.
Yeah, thank you, Chris. And of course, my last word would be: everything you have seen today on the 5-minute time frame can be applied in any time frame. And in the smallest time frame, usually the 15 time frame is also a very nice one. And in the higher time frame, the 1 hour time frame is a marvelous time frame to trade with the max. But you have to, there is no time frame better than all the other. You have to choose a time frame which best fit your own time constraints, okay, and possibilities. And so on that last word, so like Chris, I thank you very much for your participation and all your comments or questions. That is always appreciated. And so we try to make always our best to answer all the questions. On that, I wish you a great day, a great rest of the week. Be prudent tomorrow with the non-farm payroll. And on that, take care. Bye, everyone.